This is the second part of Lucy Ethel Dermatology. In this module, we will create the balance sheet and the P&L or income statement. So from the T accounts, which you did in the last in the last video, we'll now create the balance sheet and the profit and loss statement. So I always find that it is easier to do the P&L first, and so here in yellow are our P&L accounts. So if we go over here, let's create our profit and loss statement. So here we have Lucy and Ethel Dermatology practice, and this is called our income statement. And remember, the income statement is always for a period. So this is for the 1 month ended 1/31/2000 XX. So going back to our T accounts, we know on our revenue side we have patient revenue and sales revenue. So here, in fact, what we could do is just copy. So we have revenue. Oops, I didn't like that. So I will do plus. We have patient revenue, and we have sales revenue. And the amounts are, let's make that a little bigger. So let's go here. So here our total revenue, whoops. Total revenue is $15,250. And it's always good to have a line when we do an addition. So we will do this. And now we'll add our expenses. So our expenses from our T accounts, we have supplies of $1,000. We have cost of sales. Again, you could just do plus and get that way. Doing a little bit of a hybrid here. We have rent. And we have depreciation. So we have total expenses, $3,267, and so we have net income. If I do plus 15,250 minus that, so our net income is 11,983. I also like to have commas, so here we click the comma here, and you see what happens is we get the cents. We don't want those, so we do that. Okay, so that is our income statement. So the next part is we need to close out our temporary accounts. So in order to do that, we close out those to what? We close them out to retained earnings. So here, to get rid of income, we debit here, and income always increases retained earnings. Here, sales revenue, get rid of it here, and expenses always decreases retained earnings. So remember, to decrease retained earnings is a debit. Here we're going to get rid of all of the expenses, closing them out by doing credits on the P&L side. And so it's a debit to retained earnings. So since we didn't really have many transactions in order to figure out the balances in our balance sheet accounts isn't that difficult. Let's do it here on the cash account, right? That has the most transactions because of obvious reasons. We purchase stuff. Okay, so our cash balance is going to be, right, we add up each side and our cash is going to be 91,250. All right, our accounts receivable is 5,000. Our inventory is going to be 1,000 minus 100, 900. Our PP&E is 10,000. Cumulative depreciation. We have prepaid rent, security deposit, and inventory. And our accounts payable. And let's figure out the balance in our retained earnings. Okay, so this number should look familiar, right? 11,983. Our change in retained earnings is 11,983. If we go to our income statement, right, those numbers match. So let's do our balance sheet now. So we're going to have the same name of the practice, right? But this is going to be our balance sheet. And the balance sheet, remember, is a period in time. So it's a snapshot. So it's as of 1/31/2000 XX. So remember, our balance sheet has assets, right? And then we have liabilities. And we have equity. All right, so let's go and list all of our assets out. So here we're going to have cash. We're going to have accounts receivable. We're going to have inventory. We're going to have PP&E. We're going to have accumulated depreciation, prepaid rent, our security deposit, and our inventory supplies. Okay, under liabilities, we're going to have just accounts payable. And under our equity, we have paid in capital, and of course, retained earnings. So we'll fill in our numbers now, right? So cash, our cash balance is 91,250. Our accounts receivable balance is 5,000. Our inventory at the end of the period is 900. Our PP&E, is 10,000. Our accumulated depreciation, so this is 167. However, remember that this is a credit, and so we have to make that a minus, or otherwise we won't come out correctly. Our prepaid rent is 2,000. We had a security deposit of 2,000. And we had our inventory for supplies of 2,000. So our total assets here are going to be 112,983. So total assets. It's always good, since we have a total, to make a line above there. That's incorrect, so we'll redo that. And here we have our liabilities. Our accounts payable is 1,000. We have our paid in capital, which here is 100,000, and our retained earnings, which is 11,983. So we want to do a sum of our total equity, and then here we're going to have total liabilities plus equity. And those are going to be I think I got that wrong. Let's see, this plus that. So here you can see that our assets equals liabilities equity, right? 112,983, 112,983.